Investing in mutual funds is a smart way to diversify your portfolio, but where do you start? First, decide if you want to actively manage your investments or take a more hands-off approach with index funds. Next, calculate your budget. How much can you comfortably invest? In today's video, we're going to delve into the world of mutual funds. Investing in mutual funds can be a great way to grow your wealth over time, whether you're saving for retirement, education, or other financial goals. Mutual funds pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other assets. This diversification spreads risk and can potentially lead to better returns than investing in individual stocks or bonds. Let's explore how you can get started with investing in mutual funds. But before we continue, we would like you guys to subscribe to the channel, like this video, and hit the notification bell icon so you do not miss out on any amazing and entertaining content. Also, for more updates, be sure to visit our website regularly at cryptogolorenews.live and follow us on Instagram at cryptonewsgalore. What are mutual funds? Mutual funds are like big treasure chests filled with money from lots of people who want to invest but might not know exactly where to put their money. Think of them as teams of professional treasure hunters, called fund managers, who know all the secret spots to dig for treasure, like stocks and bonds. When you put your money into a mutual fund, you're basically joining this team, instead of putting all your coins in one spot and risking losing them all. If that spot doesn't pay off, the fund managers spread your coins out in different spots. So, if one spot doesn't have much treasure, you still have a chance to find gold in other spots. This way, you're not putting all your eggs in one basket. Plus, by joining this team, you get to explore different places for treasure that you might not have access to on your own. There are different teams of treasure hunters, each with their own map and strategy, depending on what kind of treasure they're looking for. Some like to search for shiny gold stocks, while others prefer the safety of bonds. So, you can pick the team that matches your treasure hunting style. Types of mutual funds. There are several types of mutual funds to consider when you start investing. Equity funds invest primarily in stocks, offering potential for growth but also higher risk. Bond funds invest in government and corporate bonds, providing income and stability, but with lower potential returns. Balanced funds invest in a mix of stocks and bonds, aiming to balance growth and income. Index funds track a specific market index, offering broad market exposure with lower fees. Finally, there are specialty funds that invest in specific sectors or regions, such as technology or emerging markets. How to choose a mutual fund. Choosing the right mutual fund depends on your financial goals, risk tolerance, and investment timeline. Start by assessing your risk tolerance. How comfortable are you with market fluctuations? Consider your investment goals. Are you saving for retirement, education, or a major purchase? Look at the fund's past performance, but remember that past performance doesn't guarantee future results. Evaluate the fund's expenses and fees, as these can eat into your returns over time. Lastly, consider the fund manager's experience and track record in managing similar funds. How to invest in mutual funds. To invest in mutual funds, you'll want to decide what type of funds match your goals, choose an online brokerage account, and research your options, being careful to consider and understand fees. Start by opening an account with a reputable brokerage firm or directly with the mutual fund company. You'll need to provide some personal information, such as your social security number and banking details. Once your account is set up, you can choose the mutual fund you want to invest in, decide how much money you want to invest, and whether you want to make a one-time investment or set up regular contributions. Review and confirm your investment, and your money will be invested according to the fund's strategy. Choose between active and passive funds. When it comes to investing in mutual funds, the first step is to decide between two main types, active and passive funds. Active funds are like having a team of professionals who actively research and pick investments in an attempt to beat the market. On the other hand, passive funds, such as index funds or ETFs, aim to match the performance of the market rather than beat it. This decision is crucial because it shapes your investment strategy and determines how hands-on you want to be with managing your investments. Calculate your investing budget. Understanding your investing budget is the next important step. Consider two aspects: the minimum investment required by mutual funds, and the amount you're comfortable investing. Mutual funds typically have a minimum investment amount, which can vary widely from as little as $1 to several $1,000s. Determine how much you can afford to invest and the mix of funds that aligns with your financial goals and risk tolerance. Decide where to purchase. Once you've determined your investment budget, you need to decide where to purchase your mutual funds. You have several options, including buying directly from the fund company, using an online brokerage platform, or seeking guidance from a financial advisor. Each option has its advantages and disadvantages. Buying directly from the fund company may limit your fund choices, while using an online brokerage offers a wider selection, but requires more independent research. Understand mutual fund fees. Understanding the fees associated with mutual funds is crucial for making informed investment decisions. These fees can include expense ratios, transaction fees, and sales commissions known as loads. Open-end and closed-end funds operate differently, impacting costs and pricing structures. Take the time to research and understand the fees associated with your chosen mutual funds, as they can significantly impact your investment returns over time. Manage your portfolio. After you've invested in mutual funds, it's essential to actively manage your portfolio to ensure it stays aligned with your investment goals. This includes regularly reviewing your investments and rebalancing your portfolio as needed. Rebalancing involves buying or selling assets to maintain your desired asset allocation and risk level. Additionally, it's important to avoid making investment decisions based solely on past performance, as this is not always a reliable indicator of future success. Benefits and risks of investing in mutual funds. Investing in mutual funds offers diversification across many securities managed by professionals, potentially leading to better returns. They are liquid and accessible to all investors, handling administrative tasks for simplicity. Mutual funds also provide the convenience of automatic reinvestment and dividend distribution. However, mutual funds carry market and liquidity risks, which can affect investment values, especially in volatile markets. Specific fund types also have risks like credit and concentration risks. Understanding these risks is essential for making informed investment decisions and managing your portfolio effectively. Mutual funds can be a valuable addition to your investment portfolio. They offer diversification, professional management, and accessibility to a wide range of investors. By understanding the types of mutual funds available, how to choose them, and the risks involved, you can make informed investment decisions that align with your financial goals. Whether you're saving for the short term or planning for retirement, mutual funds provide a flexible and effective way to grow your wealth over time. Thank you for watching. If you found this video informative, please like, subscribe, and hit the notification bell for more content. For the latest updates and investment insights, visit our website at cryptogalorenews.live. Don't forget to follow us on Instagram at CryptoNewsGalore for updates and discussions. Happy investing!